Hi, this is Olaibiboy of Commercial Property Club, where we serve investors with knowledge pertaining to income producing property. Once again, we'll be engaging in a topic which I call a comparative overview, commercial real estate versus stock. Investing in commercial real estate or stock is a personal choice that depends on your financial situation, your risk tolerance, your goals, and your investment style. It's safe to assume that more people invest in stock market, perhaps because it doesn't take as much time or money to buy stocks. If you're buying real estate, you're going to have to save and put down a substantial amount of money. When you buy stocks, you buy a tiny piece of that particular company. In general, you can make money by two ways with stocks: value appreciation as the company's stock increases, and dividends also too from that. When you buy real estate, particularly commercial real estate in this case that we want to consider, you acquire physical land or properties like apartments, senior living, or hotels or retail. Most of these real estate investors make money by collecting rents, which can provide a steady income stream. And through appreciation, as the property's value goes up, also that's part of it. Since real estate can be leveraged, it's possible to expand your holdings, even if you can't afford to pay cash outright. For many prospective investors, real estate is appealing because it is a tangible asset that can be controlled, with the added benefit of diversification. Commercial real estate investors who buy property owns something concrete for which they can be accountable for. There are a number of considerations for investors when choosing between investing in stocks or buying commercial real estate as an investment. It is important to weigh these pros and cons of both real estate as well as stock investments. I'll be considered first stocks. In order to raise capital for their business operations, many corporations elect to sell shares of stock to investors. In return for their money, investors are entitled to a small percentage of the ownership of this company, it's equivalent to the numbers of shares that they purchase. If the company uses the funds wisely and invests in profitable projects, the value of the shares rises over time. In the modern economy, most companies are held by private citizens as opposed to the public sector. This free disposal of ownership rights enables companies to sell their shares in the stock market to finance their activities in the company, and especially large companies relying on investment banks to place their shares on the market. The stock market allows every participant to trade any shares. These shares represent an investment opportunity for households that do not want or have the means to start a business themselves. They can invest in a company and share the risk of its activity as well as the gains. Often, households rely on experts to obtain a professional management of their investment in exchange for a fee for these management experts. Well, let's consider what are the advantages of investing in stocks. Stocks have a number of advantages which have them to be a desirable investment, so to say. Number one, the liquidity element of investing in stock is nearly unrivaled. Investors can decide to buy or sell within seconds. Number two, this shares allows the shareholders to have an ownership stake in the issuer company. Number three, there is a substantial capital appreciation in the shares of the company, which provides good returns. Stocks offer very high returns in relation to other investment in a short time. That's the fourth advantage. The fifth advantage will be the shares gives a right to vote to the shareholders on the matters concerning their interest. Another advantage will be stocks are easy to buy and sell. The stocks investment provides dividends income. That's another advantage. The next advantage will be there is diversification of the portfolio allowed under stock investments. Another advantage that we're going to consider today is the tax benefits are a major advantage also too when it comes to stock investments. And the last one I'm going to talk about today is it's a very convenient form of investment as it is. It doesn't require much to really get engaged in investing in stocks. However, there are disadvantages also too that I would like to consider today, which are like number one, the share market is extremely volatile as there are numerous factors affecting the value of shares like government policies, budget, sectorial events, company disclosures, changes in management of the company can also be things that may affect stocks. The second one that we want to talk about today will be the brokerage can eat up into your profit because of the margin and the fees that they would charge. The third one will be apart from the volatility of the market, as I've earlier on mentioned, the equity investment carries the highest amount of risk, even in terms of corporate finance. Another disadvantage will be there are risks of market fluctuation as a result of economic decisions, government regulations, and other geographical events that might be happening at a particular period of time. The last advantage I want to talk disadvantage rather I want to talk about when it comes to stock is stock investing requires an in-depth research about the particular company or the market that you're investing in. Therefore, unless one can do all the research before investing, stock investing might be termed a place of gambling. Well, let's talk about the aspect of commercial real estate. Since we're talking about the comparative overview of commercial real estate versus stock. Commercial real estate or CRE refers to a class of real estate assets that are purchased with the intent to make a profit through cash flow or property appreciation, a tax shelter, and mortgage amortization. The basic premise behind a commercial real estate investment is that a property is purchased for a certain amount and that purchase is financed with a combination of the debt and equity. The space in the property is leased to other businesses and the result of the rental income is used to pay operational expense including taxes, insurance, and if there be any more money left over, it is distributed to equity investors at the stipulated time. Commercial property investors also have a number of options. They can purchase a property directly, which is the equivalent of purchasing an individual bonds, or they can invest in a real estate investment trust, which is otherwise referred to as your REIT, which is the equivalent of a stock or bond fund, or they can even invest with a private equity firm, which is a unique alternative way of investing. Now let's consider the advantages of investing in commercial real estate. Number one, commercial real estate investment ensures steady cash flow. Number two, commercial real estate lets you build substantial equity. Number three, accumulates significant equity through leverage. Number four, commercial real estate provides excellent asset appreciation in value. Number 5, commercial real estate investment is a secure investment. The next advantage will be providing a superior edge against inflation because they are physical and tangible asset. Another advantage of commercial real estate is it increases in value over time. And the last advantage I want to mention today is the increased producing nature of commercial property. The income producing nature of commercial property makes them a comfortable risk for commercial real estate lender. The disadvantages of investing in commercial real estate is as follows. Number 1, it requires heavy upfront capital investment. Number 2, commercial real estate is greatly affected by economic conditions. And number 3, commercial real estate comes with an extreme specific range of needs in terms of maintenance. Number 4, commercial real estate requires great heavy maintenance, most especially those classes that are in their older age. The next disadvantage will be the transaction cost associated with buying and selling property can be quite steep. The next disadvantage is commercial real estate is not liquid, so it can be difficult to sell off real estate within a short period of time. And lastly, a disadvantage in the aspect of taxation will be commercial real estate income is subject to taxation. So in conclusion, real estate and stock both present risk and reward. Investing in the stock market gets a lot of attention as a retirement investment vehicle, particularly for people who contribute regularly to a tax advantage account such as a 401k or individual retirement account. However, diversification is important, especially when saving for the long term, for retirement, as you may consider. Investors should opt for a variety of asset class or sectors to reduce their risk. Investing in real estate is an ideal way to diversify your investment portfolio, reduce risk, and maximize your returns. Now, to evaluate whether you should invest in commercial real estate or stock or both, you should consider the factors of market volatility, cash flow, diversification, management and transaction cost, liquidity, tax effect, and your own time and effort. There are pros and cons for each of these factors for stocks as well as commercial real estate investing. It ultimately comes down to which one you prefer for risk, your time, your specific horizon, and your investment goal as an investor. Once again, I hope the knowledge we shared on Commercial Property Club it's of value today. Join me next time. This is Ola Ibiwoyi.